Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 13th, 2024, and we're diving into the latest earnings report from Sunstone Hotel Investors. Joining us is John, Senior Analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Sunstone Hotel Investors, a prominent lodging REIT, has just released their third quarter 2024 earnings report. There's a lot to unpack, from operational results to strategic initiatives.
Revenue and profitability overview. Let's start with the financial highlights. Sunstone reported a net income of $3.2 million for Q3 2024, a significant drop from $15.6 million in the same quarter last year. John, what are the key factors behind this decline?
The decrease in net income is primarily due to a 1.3% drop in RevPAR to $207.56 and a 15.9% decline in adjusted EBITDA to $53.6 million. These figures reflect a challenging environment, particularly with labor disruptions at the Hilton San Diego Bayfront and the transition of the Confidante Miami Beach.
Despite these challenges, are there any positive signs in their operational performance?
Yes, excluding the impact of the Confidante Miami Beach and the Hilton San Diego Bayfront, RevPAR actually increased by 2.4%, indicating strong performance in their stabilized portfolio.
Strategic initiatives and investments. Sunstone has been active on the strategic front. Can you tell us about their recent initiatives?
Certainly. Sunstone repurchased $23 million worth of stock at an average price of $9.79 per share, which they believe is a discount to NAV. They've also secured a new $100 million term loan to refinance the JW Marriott New Orleans mortgage, enhancing their financial flexibility.
And what about their investments in property renovations?
They've invested heavily in the transformation of the Confidante Miami Beach into Andaz Miami Beach, with a total investment of approximately $95 million. This project is expected to drive significant earnings growth in 2025.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of 20 cents for this quarter. How did Sunstone perform against these expectations?
Sunstone reported an EPS of 18 cents, slightly below the forecast. This shortfall is reflected in their adjusted FFO per share, which also came in at 18 cents, marking a 21.7% decrease from the previous year.
What does this mean for investors?
While the EPS miss is a concern, the company's strategic investments and stock repurchase program indicate a focus on long-term value creation, which could be promising for patient investors.
Future outlook and CEO insights. Looking ahead, what is Sunstone's outlook for the future?
CEO Brian A. Giglia emphasized their focus on positioning for meaningful earnings growth in 2025. They are optimistic about the increasing demand for business travel and the strength of their portfolio, particularly with the full-year contribution from recent acquisitions and renovations.
How does the CEO view the company's current position?
Mr. Giglia highlighted their strong balance sheet and liquidity, which positions Sunstone to create value through strategic capital deployment. This approach is expected to drive incremental earnings growth in the coming years.
Key takeaways. In summary, Sunstone Hotel Investors faced some challenges this quarter, with a decline in net income and a slight miss on EPS expectations. However, their strategic initiatives and focus on long-term growth provide a positive outlook. Thank you for joining us, John.
Thank you. It's been a pleasure discussing Sunstone's performance and prospects.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe for more financial insights. We'd love to hear your thoughts on Sunstone's performance in the comments below. Until next time,